Ladies and gentlemen of the crypto space, we're live on Friday, September 13th at 11:15 a.m. We'll see how much time we have today and get through as many comments as possible. We're a little limited on time, but no less. Understanding the system is both a curse and a blessing. A curse in that, holy crap, this stuff is screwed. Like the construct of the system is designed to completely implode. I say that often, every second of every day. The system is ready to fail. If a large enough actor completely blows up, there goes the currency, because that's the whole point. It's the actors that are pursuing credit to attempt productivity or some sort of leverage that they needed, uh, using that credit to do something they couldn't do without it. That is what creates the global supply of currency. And all you need is a large enough actor, maybe even a nation state, to blow up. And it takes out 5%, 10% of global currency. And that just causes a cascade that it's absolutely impossible to contain the collateral damage. And you get an absolute catastrophe at a structural level. So I'm well aware of that. I talk about that. I understand that. And I understand what the powers that be, status quo, the institutions, clearly the politicians, would do in such scenarios. And that's it's gross. It's disgusting. Yes, you could argue they're defending the system, the people, the general public, but it's such a horrible, perverted, self-interest system, cronyism, and friends of friends, and haves and have-nots. And I'm far from a socialist. I don't believe in that as an effective system, due to the way humans are programmed, and that's okay. Much more so a capitalist. But I think there are better ways to construct systems. You can't just construct systems, because systems are kind of sprinkled with seeds and they grow into things. And it's not like you could transplant a form of a system on top of another system. That's not the way things work. You can't switch things on and switch things off. So that's an entire, um, an it's almost, you can't put into words, simple words and brief sentences. What do it mean to engage or create or transform into some sort of alternative version of the system? How do you get from A to B? It has engineering overtones and not only economic overtones and political overtones. There is no getting from A to B. That's an incredibly complicated conversation to even begin. So suffice it to say, we are stuck with the current system in its current form. So the best that we could possibly do as individuals is understand the pressures in the system, what drives different things to occur at different times based on the mechanics of the system and how it works. And basically, the system is screaming, holy crap, right about now. As the yen strengthens, it gets more and more expensive for debt taken out in Japan to be used in investing in US equities, for instance. It's more expensive to pay it back. So you have to buy the yen that you borrowed to pay it back. So this is part of, like, well, by definition, that's a carry trade when you borrow capital to invest in something that's producing more return than the interest rate at which you borrow. It's called everything's a carry trade in many regards. Even a mortgage is a carry trade of sorts. Um, so this is going to deleverage, force the deleveraging of anything that was bought in equity markets using borrowed Japanese capital. Period. That's just the way it works. And and it's getting to very interesting levels. Um, the lower it goes, the dollar versus the yen, the stronger the incentive is to sell U.S. equities that were bought using borrowed Japanese yen. And that is part of the equation why I say there's going to be a significant deflation in U.S. equities and a reevaluation of what is a viable investment. And this can just result in a rotation of capital. I mean, sure, it might be more expensive to pay back your yen, but you're still talking about what kind of percentages. A carry trade, let's say, it only remains valid if your potential return is greater than your cost of capital. So if you're expecting a rate of return on commodities or industrials in the US at 100% in 2025, which could very well be the case given this insane underperformance of commodities and industrials, then yeah, maybe a 15% increase in cost of capital, considering currency rate, the relative currency valuation change, as well as the relatively negligible interest rate change in Japan, then it doesn't necessarily draw that capital back to Japan. It just causes an absolute massive rotation of capital within the United States from bullshit, pig shit, overpriced equities into stuff that has been completely neglected. Malinvestment being cured. So it's not necessarily the carry trade unwind that everyone keeps talking about in such a high level, broad strokes type conversation. There's much more nuance and a variety of different choices and options that investors can take. Still plenty of ways to outperform because of what the US government broadly has done with regard to deficit spending. Uh, Reinforcing the amount of currency in circulation in the US, especially, and the most counterintuitive thing to understand is interest rates considering the debt load. The amount of interest being paid on debt is a strong stimulative effect, considering the amount of bank credit that's being issued. The whole point of raising interest rates is to slow bank credit in order to decrease the amount of currency that's being added into circulation by banks lending money into creating it. That credit is what creates the currency. That's the whole point. But that's not slowing shit because the US government is just, they don't give a shit about the interest rate. And the deficit spending is through the roof. So it didn't curtail credit at all for the largest actor in the room, US government, which has crowded out the entire debt issuance space. They're the borrower, gives a shit what the banks are doing. That's what everyone talks about with regard to fiscal dominance. So the high interest rates is causing a stimulative effect. They're pumping capital into the system, especially as more and more and more of their securities roll over and need to be refinanced at the higher interest rate. They actually need to lower interest rates to cut the stimulus. As long as they keep the deficit spending up, they need to lower the interest rates. Because the deficit spending is what is preventing an overly exaggerated deflationary impulse across everything. They're just pumping the system full of capital, bolstering currency supply basically at a global level. And look what's going on in China. It's down 90% their real estate sector. How the hell is the system not imploding? So for China to manage that deflation, they need to export inflation. They need to increase, they need to stimulate their economy. And in doing so, they're creating cheap products, cheap. They're stimulating and subsidizing, so on and so forth, which means they got a whole shitload of stuff they need to sell. And those relatively cheap products are going to be exported because their domestic monetary system is under pressure and there's not enough spending. So they're exporting it. And the relative value of those products that they're exporting is causing an exportation of one hell of a pressure in the system. How the hell is everything else supposed to compete against these relatively cheap exports? So if you have deflation in a country, that means they're going to export inflation. It's the opposite effect. You have inflation in a country, you're exporting deflation. And I promised myself the other night that I would get that right. And on the spot right now, I'm pretty sure that statement is the mechanic. I may have to double think that. But um, suffice it to say, this is part of the conversation of the pressures in the system, and understanding them is a fucking curse because now I get to think of what the hell is going on in Japan, what the hell is going on in China, and what the hell is going on in Europe, and what the hell is going on with oil prices, and how the hell regulators are suppressing volatility in the currency markets, and how they're suppressing volatility in the equity markets, and and how they're suppressing volatility in the collateral markets, probably most importantly. Central clearing, DTCC, let's have some levers, some circuit breakers, so you can prevent move from spiking. So everything is moving in a confluence. We're the perfect confluence right now for shit to finally start getting to the point of we're going to see the main event. Yen is strengthening. Long end US collateral treasuries are strengthening. Volatility in the move index is coming down finally below 98 again. The XY is back below 101. I've said many times you get below that 100 mark and move is below 80. That's the weird situation. And especially like yen, USD JPY starts getting below 140. We're getting to that point where the powers that be do what they always do, is finance social civility and protect the status quo. And that's really expressed in what gold's doing. This shit was over 2,600 in the futures market this morning, and 2,577. Just everyone's calling bullshit at this point. Even folks in Congress, you hear folks in Congress talking about how bullshit the system is and how it's just a dog and pony show. It's just basically a soap opera or reality TV, because whatever the hell they're proposing either is just an agenda, it's tacked on to a must pass bill, and it just gets stripped out at the end because it was never going to pass anyway, and they need to pass the bill. For instance, debt ceiling type bills, tacking on shit. It's just, I don't know. I decided to grow up and start to understand how the system is complete bullshit. And anyway, it's just that's disheartening in so many regards. But we talk about more personal things, our individual choices and capacity to invest and benefit from how bullshit the system is. And that's why we talk about the only investments that are even remotely reasonable, that make any sense whatsoever to outperform, because gold going from 2,500 to 5,000, I mean, seriously, that does jack shit for anyone. You turn $1,000 into $2,000. Seriously, who cares? I mean, yeah, that that may be a short-sighted statement. I don't mean to be insensitive. $1,000 into $2,000 could be very meaningful. That doesn't change anything if your monthly mortgage is $1,000. You just waited for a structural change in the system where something doubled in price. Gold, oh my God, you know what that means for the system? And you got a whopping 1 month rent or mortgage out of it. So it does nothing structurally for your individual situation. And that's why we talk so heavily about investments that have a capacity to affect your individual situation. And I obviously express that in terms of my individual situation. There's no alternative. Tina never left the room. It has always been, there is no alternative. Tina, nothing else makes sense to even potentially achieve what you're looking to achieve with regard to revenue or with regard to portfolio performance. There's no other market in any country that can do something or produce the potential returns that can impact my life the way I want it to. So it turns out it's also consistent with my software engineering background, my or just my engineering education, because all this shit makes sense. Now that I learned what banking is and currency and money and value, three separate things right there, I understand what we're dealing with right here is banks and credit, foreign exchange, and derivatives. The three business types in the crypto market. There's nothing else. Foreign exchange, credit, derivatives. All the narrative, everything you see on social media. Oh, the technology. Oh, the banks are going to use it. Oh, Swift adoption. Oh, real world assets. I don't give a fuck. I don't give a fuck about the narratives. I don't care about the bullshit. If I'm going to invest in capital, fuck you, pay me. That's it. You better be getting paid or you better be getting something for an investment. Why? Because that's a fiduciary responsibility. That is an obligation for a rational investor. What are you getting for your investment? If you are investing in something and you hope that other people invest in it as well, and that's going to cause the price to go up, that's not a fucking investment. That's a pipe dream. That's hope. That's not investing. An investment is I'm putting this amount of capital in. What the hell am I going to get for it? I'm giving you money. Your money means something. I don't like gambling. I have gambled. I no longer gamble. Life is not something to gamble over of or gamble over. It's supposed to make adult decisions. So that's the story I guess I'm trying to tell. And at least this is the emotion I'm expressing and why I've done the things that I've done and how I do the things that I do and why I think the way I do. It's a very simple equation. Your money's important. You're using it for something. You better get something for it. That's I got rules of thumb and I got best practices and I've had a lot of quotes over the years. I guess that's maybe the more professional way to say I'm investing. How much you paying weekly? Pay me. That's the fuck you pay me type conversation. What are you getting for your investment? So in lieu of time, 11:33, let's do some commentary. Obviously, we've got the gold chart up, and this thing looks absolutely insane. This is basically Confluence confirming the confluence we're seeing across the board, from the DXY to the move to the yen to the bond market. Oh my God, I'm stunned at just how everything is just converging into perfect storm, which coincidentally is a precursor to crypto basically going ballistic. Why? Because that's what history says occurs. And that's not like third party history. I've seen this occur. I've seen this playbook. This is like watching the third or the fourth part of a trilogy or a quadrilogy, whatever the hell it's called. This is watching the third episode of a trilogy. It's like, oh, I've seen this. That's where we are. Everything gets stupid before it gets. Crypto going parabolic is stupid also. You got to understand that. That's hyperinflation in the crypto market. If you didn't know that, and that's an important thing to recognize. Crypto going parabolic means the pricing of the assets are pricing out so many people. Hyperinflation in crypto markets is the quote unquote bull market. And that is not, it's just important to recognize that. Sir Joe, President accounted for. Anonymity, every fiat money has collapsed in human history except one, I think. You can inspect history all we want. Fiat money collapse. What is fiat money collapse? The debt construct. We never had a debt construct like this globally dollar denominated. Not even any currency denominated. The whole system owes more dollars than any time in history. And we're talking about foreign countries. They owe dollars. So if a country in Southeast Asia owes dollars to a country, a location in India, that dude in India wants his dollars. He doesn't give a shit about de-dollarization. I'm in India. I lent you dollars. Pay me my money. I lent you dollars. Pay me my money. Process that. That's where we're heading with regard to the dollar situation. No one gives a crap about de-dollarization narrative. They give a crap about the denomination that they lent. They want to get paid back because I'm in India, I lent you dollars, you have to pay me because I owe someone else dollars. So the collapse comes from the dollar going to 500 and 1,000 on the DXY. Brent Johnson nails it on that one. Gazika, greetings, Cap. Iden, good morning. DA Advisor. Good morning, folks. Shabbat Shalom. Nice to see you, Cap. If you can share a few words about Nile and Linnea later, that'd be cool. We'll do it now. We'll get through the comments. I have about 20 minutes. Linnea, uh, consensus. Yeah, this is high level, just narrative. And well, Nile on Linnea. So I'm fond of the kingdom. They were the first crew to start to figure out the whole solidly situation post V1 launch. And then obviously Velodrome did what it did, and there's a bifurcation in the post solidly ecosystem with clearly the most recent version of solidly as well. And there's the offshoots, the protocols that are not part of that trifecta, which is basically the Velodrome crew, the solidly crew, and the kingdom crew. So I think more so in terms of market, and I think about exposure to market. So I find the Linnea market interesting. It is lagging hard because it's non-favorable conditions for cross-border capital flows, so to speak. Arbitrum's doing wild, base is doing wild, everything else is lagging. And that is what it is, and that's okay, because when market conditions start to present themselves as favorable, capital bleeds everywhere, and that's when the system is picking and choosing what is going to win with regard to continue to exist. Is the Linnea market meaningful from consensus? Is the scroll market meaningful? Is arbiter meaningful? Is optimism meaningful? The market tells us. We'll see it in the data. If base has $20 billion and arbitrum has $30 billion, the market's telling us something. And if optimism, the whole point is the amount of currency in a particular market relative to the amount of currency in another market tells us something. So this is literally the reason why we can have a conversation on a daily basis about what the hell is going on, because we have fresh data, on-chain data, real-time data. Yeah, unlike traditional finance, which whatever, that's not the point. This on-chain data allows us to see what the hell is going on in the market, which tells us what people are thinking, what people are choosing, what is fact versus what is speculation. Seeing the amount of currency on Arbitrum is fact. It's telling us something meaningful. People are comfortable with that amount of capital in that market. The reason Ethereum mainnet has the overwhelming majority of capital compared to everywhere tells us probably the most important thing. That's where capital is most comfortable. Hope that helps. My man. Could the US default on debt? No, because they could always do QE and reduce interest rates and print currency units to service the debt. No, they're not. It's impossible for them to default. If so, how do you perceive the consequences of such an act? No, it's impossible. Arrow, good morning. DA advisor. Yes, indeed, everyone. Yeah, that's a good question for Arrow. Obviously, we talk about in Discord. I talked to Arrow quite a bit. We've made some choices over Kingdom assets. We've gone back and forth at times. I remind folks that when I purchase something, it's a purchase. It's a permanent acquisition for purposes of ownership, and I live with my my what I own. I own it. It's a choice. I don't back out of my choices. When I buy something, I buy it because that is meaningful to me. It's not a matter of like conviction. Oh, I believe in it. If it fails, it fails. I fucking bought it. It was my choice to buy it. And if I made a wrong decision, I own it. So that is something that makes sense to a person like me, and it's meaningful to me. So that's what I did with Nile, Cleopatra, and Cleopatra's been absolutely decimated. Nile is underperforming compared to Ramses and Arbitrum. Ramses and Arbitrum is performing significantly better for myself, and that does not take into account my sentiment regarding Linnea and Mantle. Linnea, all right. So I have a hope that what I own continues to do well into the future, or at least remains productive and gets more productive into the future. Yeah, sure, I can hope that. It is going to be what it's going to be, and that's okay. And what matters is I make decent choices with what I choose to own. I'm content with what I choose to own. And and that's something that I take great pride in. A win or a loss, a better decision or a worse decision, no matter, I own it, for better or for worse. Kind of is overtones of a marriage, right? For better or for worse. Thanks, sir. What's the average ROI you've been experiencing on Linnea? Nothing good. Underperforming relative to cost basis. It's horrible. Oh, certainly not talking up an asset. Now, bear in mind, it's at a discount. That's a true statement. I could certainly state that. Um, So, from a speculative standpoint, Linnea is consensus, which is Ethereum, which is interesting. So, from a speculative statement, that's interesting. So, maybe at a discounted price, it's mispriced. That's a food for thought. Now, so you could say the same thing about Ramses on Arbitrum. What's nice about these businesses is that they pay not even weekly, they pay in real time. You have a streaming source of revenue. The question is, do they continue to pay X, Y, Z? How much does it cost? How much is it paying? And how likely is it to continue to pay? Now, in hindsight, relative to the amount of capital I deployed in basis for Ramses, it's done well. I'm quite content with the situation in the market, the status of the market, what it's paying now, considering the basis I have. Not bad. Not bad. Um, Disappointed in Cleopatra and hopeful for Nile and Linnea. Now, one thing about Mantle, the cross chain's insane. Integration with Stargate, I mean, it's like 10 seconds. Something about the architecture facilitates absolutely insane cross chain execution. Now, what AWA and Cross Curve and Phantom? What's going to happen with Phantom? Holy crap, the development over there what Andre's cooking up. So, the market's going to be so fascinating in the coming years. Where what the people in the market are going to tell us is most meaningful, and we'll see that in price. Very, very interested in what's going on Phantom. I mean, listen, Avalanche is on the back burner, but they got some serious integrations and partners. Very, very interesting. What kind of exposure over there? Faro, maybe. I mean, Trader Joe is a force to be reckoned with. So they're even showing their strength on Arbitrum lately. So I don't think it's a zero sum game. I think there's plenty of room for all of these FX markets to show strength and outperform. Outperform what? TradFi, obviously. TradFi banking. Holy crap! I mean, imagine getting real time dividends in an equities market. What a joke the equities market is compared to these markets. Absolutely no chance of achieving anything reasonable. 401ks, what a disaster. What a disaster. The best thing I ever did was in 2019 was to get rid of that garbage. Anywho, I digress. I'm clearly a little bit emotional today and also short on time, so I'm trying to get out the best arguments as possible. Frank, vote market incentives are at 88K. That is significantly down from highs. Any concern about long-term thesis being invalidated? No. I know there's very consistent actors. Threshold Network, very consistent actor. Frax is going to be doing what they're going to be doing on all chains. They understand the vote process, and there's plenty. Alchemix understands it, so it's a depressed market. But what this B2B business where you can incentivize liquidity um, in a capital efficient way, multiples on top of your capital deployment. You deploy 100K and you're getting 150K worth of liquidity financing. That's exactly what these systems are. It's a B2B product. So I have no invalidation of long-term thesis with regard to the concept of a capital efficient liquidity financing business. So that's also another business. Maybe I don't say that often enough. Clearly, you got FX, credit, derivatives, but literally you have crypto B2B business in liquidity financing. That is, by definition, a business. Derivatives is the PAR protocols. Stable coins are really credit. So maybe that is just a very concrete fourth category. Because there's plenty of financing in TradFi, and I guess it's a decent statement to put it in its own category. It seems very hard to talk about to general public or someone who's not like, oh yeah, this is crypto liquidity financing, duh. But that's what it is. I think that seems very reasonable. FX, credit, derivatives, liquidity financing. The four categories of everything. That's all there is in crypto. Those are the businesses that you get to choose from. Now ask yourself which one's paying you. You're investing your money. Your money. What are you getting for it? Always ask yourself that question. Any idea why no V33s have taken big spot on Ethereum mainnet? Well, Solidly's on mainnet. Bitcoin narrative is probably the thing I'd go to. Strength, status quo, entrenched infrastructure, moats, trust, lendiness. There is no lendiness on base. There's barely any lendiness on anywhere other than mainnet. There's no history dating back to 2016. Everything other than mainnet didn't exist prior to 2020. Nothing existed prior to 2020. So the market actors there have no idea what is trusted infrastructure. So I think that's meaningful in the inspection. Plus, it's expensive to manage concentrated liquidity positions on mainnet, especially in more favorable conditions where gas prices are more expensive. The market will tell us if the protocol is increasingly significant in the future, especially the E33 protocol on mainnet. DA Advisor, did you see Andre's new project? I did not, but basically anything he does, I've always been interested in. He literally created some of the most meaningful infrastructure in all of crypto, starting with Yearn, Phantom, Solidly, and all the derivatives. And I think the biggest takeaway from history on his launches were you're early, you're taking maximum risk, maximum reward, and you don't have to be early. Like Velodrome is Solidly, is his idea. And that's not early because Solidly clearly came out and made an absolute mess. But Velodrome came out and didn't make the same kind of mess. So you don't have to be early to everything. And the most important thing is to be right. Now, it's nice to be early because then you're right you're more right, and your portfolio will appreciate accordingly. But you don't have to be early, because early means you have a chance of being really, really wrong as well. Food for thought. Gazika, tech-wise and outside of crypto, has something caught your attention recently? Project, framework, language, hardware? Well, I'm fascinated by AI. The new model from ChatGPT is quite fascinating. It's basically like a recursive model, in my opinion. So it's literally it answers and then it processes again. It's asking itself questions to refine the answer. That's quite extraordinary. Um, I have a blast interacting with ChatGPT. It's like the perfect capacity to interact with a rational actor, because you could just ask it, and it's always just going to answer. It's never going to have sarcasm or controversy. It's just going to converse with you. So it's a fascinating experience talking with a software, especially this most recent version from ChatGPT. And we've seen a lot of tech recently. Reflection 70B, big stuff. Quad, big stuff. They're all doing big stuff. It's all crazy. Everything's crazy nowadays. Very exciting. Moving forward. Innovation, iteration. Very, very exciting things. Um, Framework, language, not really. Project, outside of crypto. Basically robotics, AI, downright fascinating. I think commodities. I've had exposure to commodities since like 2016, 17, and I'll hold it for a long time, maybe 2030 minimum. And I think that is going to be very interesting as the world restructures. Now, most importantly, we absolutely know the world is going to restructure. It has to. Otherwise, there's no continuity of financials, and you get social chaos. I think it's a very reasonable statement that over the next 10 years, we have a depreciating dollar leg. Now, for folks, they need to understand dollar ends up. Failure of the dollar system is at 300. This doesn't end down. If you don't understand that, it's imperative that you understand that. Goes down and then blast off straight up, and that's the failure of the system. The dollar does not end down. The only way the dollar goes down is if the dollar is being used. This implies dollar demand, but also the meeting of that demand by fiscal authority as well as private credit enterprise, which is banks and whatnot. It's public banks as well, but um, the only way it goes down is if someone's meeting the supply. If there's not enough supply of dollars, it goes up. And for debt to be repaid, that decreases the supply of dollars, which drives it up. Dollar in the world goes through an absolute financial catastrophe where Immortan Joe is being thought of as a profound leader when the dollar goes up, not down. When the dollar goes down on this chart, you have the continuity of the system. It's the kicking of the can. Down is the system figuring out how to keep things going for a period of time. Hope that helps. Liquidity financing, Frank, I think that is a nice fourth addition to the list I've talked about for quite some time. FX, credit, derivatives, liquidity financing. Andre is the go. He is certainly one of the names. There's a lot. Julian Bodeloop from Stake DAO, obviously, whole curve team. It's not just Michael, it's whole curve. I mean, there's literally like Alchemix. I mean, come on, these names, Alchemix, and you probably got to give respect to the entire Banteg, Yarn, and synthetics, and all of them. What they've created over the last years, and it's clear I didn't nearly mention all of the profound creators. Absolutely incredible, impressive fintech. over the last years. I don't even have words for it. Hero's been kicked in the balls. Yes, it has. It's just a lot has been kicked in the balls. It's just, it is what it is. Happens to be one of my favorite investments. Price performance doesn't mean it's not my favorite investment. I had equities that went bankrupt. Brilliant investment. Just because it went bankrupt doesn't mean it wasn't a brilliant investment. Didn't work out financially, but it's one of the most important, for instance, refining operations in the Western Hemisphere. Doesn't mean it wasn't brilliant. It just didn't work out financially. So some of the greatest tech is not necessarily the greatest investments. I guess that's always a decent statement that we continue to reiterate over the years. Kat, did you say you see the Swift article about RWAs? Come on, Chainlink is incredible. Being able to tokenize everything. BlackRock says they're going to tokenize everything. Ripple's going to Swift, and everyone's going to be using XRP for everything. Greatest tech isn't the greatest investment. And the theme of today is you're going to invest money. What the fuck are they giving you? What are they giving you for your investment? And if you invest in something and they're giving you nothing on Friday, I don't like those investments. Hope that helps. Are there books you'd highly recommend, financial or not actually? What comes to your mind? Um, I like reading law lately. So not books, but I'll give you what I've been reading most lately. I like reading the Code of Federal Regulations, the CFR system. I like reading rules because the rules tell us everything about what we can and cannot do. So the better we understand the rules, the better we can do things, better choices and options we have. The Federal Register. So I like reading stuff from here. I like reading from the CRF. I read a lot of court cases nowadays, and that's from the Supreme Court. So if you go here, so you know what the guys, you might say you can't understand it. Throw it in ChatGPT. Throw it in an AI. You got to start from somewhere. And now you literally have the technology and tools to do it. You could literally understand shit that people would be like, oh, that's for a lawyer. Yeah, okay. Now I have the tools to understand what a lawyer understands. So I really like these three sites. You can read this stuff too. Uh, so the tax code. IRC code. I mean, I guess this is decent. I mean, the code for federal regulations, I think, has more strength. IRC code is like brief snippets compared to what the CFR is. So really, the CFR is more meaningful with regard to richness of content from Congress. So it's not just the IRS. It's what Congress's mandates are that are much more meaningful than, especially with the invalidation of Chevron deference has complete the invalidation of Chevron deference has invalidated the IRS saying, "Oh, this is our opinion, and this is what we're offering." Yeah, great. No, and the judge considering Chevron deference being invalidated is like, yeah, no. What does the statute say? What is the law from Congress on your mandate? And then the IRS is like, hold on, let me get back to you. So it's quite fascinating to see the changes that have been taking place. Supreme Court has been putting its foot down against the federal government, um, and its historic tendency, most recently, to to diverge from state authority. So some of the core principles in this country is called federalism, which anything not explicitly delegated to the federal government is inherently for the states. and their responsibility. That's the 10th Amendment of the Constitution. So that is a critical component in a lot of arguments, because that puts the fight between the state and the federal government. As long as the state is trying to regulate something that the Congress didn't say the federal government can do, the ball's in the state's court. So you can literally just look at state law. And in some regards, you could strongly not neglect federal law, but you could frame the argument that this is not your jurisdiction, and um, you could literally substantiate that argument by using constitutional references. And unless you can find the specific reference that delegates that authority to the federal government, it doesn't matter what they say. It's a state authority. And one of the most important things that remains a state authority that the Constitution does not delegate to the federal government is private contracts. That is an obligation of the state to regulate. Anywho, I'm going to wrap it up for today. Thank you all for joining me. 305 people made it to the end of the stream today. I appreciate each and every one of you. Stay rational. It's a Friday. Enjoy your weekend. Get some sun. Get outside. Relax. And we'll look at the markets together again on Monday, so you don't have to kill yourself. I'll do the work for you in this regard. So enjoy. Be safe. Be rational. And I will see you on Monday. Peace.